Welcome to another episode of Market Brief After Hours. Wall Street had a very busy session, heavily influenced by tech earnings, while global markets presented a much more mixed picture. It seems like technology was once again the main driver of today's market movements. How did the major U.S. indices wrap up the session?
It was definitely a tech-fueled rally today, largely sparked by some spectacular earnings guidance. If we look at the major U.S. indices, the tech-heavy Nasdaq Composite led the charge, rising 1.57% to close at 26,541. The benchmark S&P 500 also had a strong showing, advancing 0.72% to end the day at 7,731. Meanwhile, the Dow Jones Industrial Average lagged behind slightly, but still finished in positive territory, climbing about 106 points, or 0.2%, to close at 53,569.
And the big catalyst here was once again Nvidia. The anticipation for their earnings was sky high, and it seems they delivered. What exactly did we see in their report?
Nvidia shares jumped a whopping 8.7% after the company beat analyst expectations and forecast incredibly strong revenue growth. To give you some context on just how massive this is, Nvidia is projecting revenue growth to hit 70% in fiscal 2028. Analysts surveyed by LSEG were only expecting 44%. On top of that, their revenue for the fiscal second quarter more than doubled.
That is an absolute powerhouse performance, and I imagine that lifted the entire semiconductor space.
It absolutely did. We saw a broad rally across chip-related stocks. Broadcom added 4.5%, while SK Hynix and Intel rose 2% and 4% respectively. The VanEck Semiconductor ETF, which trades under the ticker SMH, rose 3%. There has been a lot of debate recently about whether the massive costs these tech giants are incurring for AI infrastructure will actually be covered by incoming revenues. Analysts are noting that this blockbuster report might just hold off that skeptical discussion for a little while. Other names in the AI trade are essentially riding on Nvidia's coattails right now.
It wasn't just hardware and chips, though. Software and cybersecurity also had a spectacular day.
That's right. Outside of the chip makers, Salesforce rallied more than 22% after its second quarter revenue beat Wall Street's forecasts. Other software names like Adobe and Autodesk climbed 5.7% and 6.2% respectively. In cybersecurity, the gains were even more dramatic. Okta soared more than 28%, and CrowdStrike gained 20.5% after both companies surpassed expectations and raised their outlooks. They are seeing a massive boom in demand, specifically driven by what they call agentic AI. Palo Alto Networks also popped almost 13% in sympathy.
That is incredible. But there's an interesting market dynamic happening beneath the surface here. I understand there's a divergence between these AI-focused stocks and the rest of the market. How is that affecting overall risk?
It's creating a very unique environment. Market researchers are pointing out that while volatility in individual stocks is high, the correlation between these stocks is actually very low because the AI trade is moving so independently from other sectors. This low correlation is keeping overall market volatility deceptively low. The concern is that this dynamic might lull investors into a false sense of security.
That's a very important warning. And of course, all of this is happening as traders prepare for the Federal Reserve's annual symposium in Jackson Hole, Wyoming.
Exactly. Everyone is waiting for Friday, when Fed Chairman Kevin Warsh is scheduled to deliver his keynote speech. Investors are hungry for any clues about his views on inflation, the economy, and the path of monetary policy. Because we've had a lack of forward guidance lately, markets could be very jumpy in response to any hawkish or dovish tilt in his tone.
We also got some key U.S. economic data today that might influence that policy outlook. Initial jobless claims fell again, right?
Yes, the labor market remains resilient. The number of people claiming unemployment benefits fell by 4,000 to 203,000 for the third week of August. That was below the 208,000 Wall Street expected, keeping the trend of low claims intact. Meanwhile, wholesale inventories rose by 1.3% month-over-month in July to $959.1 billion, which was way ahead of the expected 0.1% gain.
With all of this data, how did the bond market react?
Treasury yields were virtually unchanged as investors sat on their hands ahead of Jackson Hole. The benchmark 10-year Treasury note yield was up less than 1 basis point at 4.672%. The 30-year bond was at 5.19%, and the 2-year note ticked up slightly to 4.232%.
We are going to take a very quick break, but when we come back, we will head across the Atlantic and Pacific to check on European and Asian markets, take a look at a massive milestone for Bitcoin, and break down the latest trends in Forex and commodities. Stay with us. Welcome back to Market Brief After Hours. Let's shift our focus internationally. While the U.S. was riding high on tech gains, European markets didn't seem to share that same optimism today.
No, they struggled. Despite the positive spillover from Nvidia boosting the European tech sector, most other sectors failed to find support due to geopolitical tensions and interest rate uncertainty. The Pan-European Stoxx 600 ended down 0.69%. Looking at individual countries, the UK's FTSE 100 fell 0.79%, and France's CAC 40 dropped 1.68%. Switzerland's SMI settled down 1.09%. Germany's DAX was the outlier, climbing 0.31%.
Germany actually had some decent economic indicators today, didn't they?
They did. Germany's GKFK Consumer Climate Indicator rose to minus 26.6 heading into September, up from minus 29.4 in August. That was its least pessimistic reading since March, driven by stronger income expectations as consumers feel a bit more optimistic about their financial prospects. Also, Germany's economy grew by 0.3% in the second quarter, which was slightly above the initial 0.2% estimate.
What about the rest of the Eurozone?
Bank lending to Eurozone households rose 3.1% year-on-year in July, which was the quickest growth in 3 years. On the flip side, France saw its registered unemployment rise by 21,500 in July to over 3.1 million, its highest level since March 2025. France also saw domestic producer prices rebound, rising 1.1% on a monthly basis.
Now let's cross over to Asia, where we saw some major central bank action and mixed trading.
It was highly varied. In South Korea, Seoul's Kospi climbed 1.53% after the Bank of Korea raised its benchmark interest rate by 25 basis points, which was right in line with expectations. Chipmakers led the way there, with Samsung Electronics up 1.72% and SK Hynix up 2.49%.
And how did Japan and China fare?
Tokyo's Nikkei 225 slipped 0.20%, snapping a 2-day winning streak as investors digested the Nvidia news. Chip stocks there were mixed. In Hong Kong, the Hang Seng Index eased 0.34%, though we saw some individual tech names pop. Baidu rose over 5%, and AI play Zhipu jumped over 12%. Over in mainland China, the Shanghai Composite gained 1.13%, led by computing hardware and semiconductors.
And down under, it looks like rate hike worries are weighing on Australian stocks.
Yes, Australia's ASX 200 fell 1% as concerns grow that the Reserve Bank of Australia could tighten monetary policy as soon as next month following a hot inflation print. New Zealand stocks also dropped 1% on profit-taking after hitting a record high the previous day.
Let's transition to commodities and digital assets. Oil had a pretty strong day today.
Oil prices rose about 2%. Brent crude futures climbed 2.205% to close at $89.64 a barrel, and U.S. West Texas Intermediate crude gained 1.7% to settle at $83.66. This came after Washington confirmed it is not in talks with Iran, dimming hopes for a quick resumption of oil flows through the Middle East.
Meanwhile, Bitcoin has crossed a massive psychological milestone.
It certainly has. Bitcoin climbed above $80,000 this week for the first time since May, sitting right around $80,001. This rally has been supported by renewed demand from institutional investors, with large whale accounts buying about 43,000 coins over the past 60 days, when the price was consolidating around $60,000. Solana was also a huge winner, rising 13.5% in 24 hours. This crypto surge boosted related stocks, with MicroStrategy closing up more than 11% and Coinbase up more than 4%.
Let's look at the foreign exchange market now, starting with the euro. How is Euro USD holding it?
The euro is consolidating its recent gains against the dollar. Euro USD closed virtually flat at 1.1650, down just 0.01%. Technically, the pair is trading comfortably above its major moving averages, with the 50-day simple moving average at 1.1484, the 100-day at 1.1574, and the 200-day at 1.1631. This shows a constructive, bullish, medium-term outlook as long as it holds above that 200-day dynamic floor.
And the British pound?
A very similar story of consolidation.
GBP USD closed at 1.3589, down 0.06%. It remains firmly above its key moving averages, with the 50-day at 1.3417, the 100-day at 1.3443, and the 200-day at 1.3433. The broader bullish trend is intact here as well.
The Australian dollar, however, managed to push higher.
Yes, AUD USD rose 0.34% to close at 0.7196, approaching the 0.7200 handle. It is distancing itself from its moving averages, sitting well above the 50-day at 0.7009, the 100-day at 0.7075, and the 200-day at 0.6962. That indicates strong, sustained buying interest.
Let's also touch on precious metals. Gold and silver have been making some interesting moves.
Gold stabilized today, closing up 0.25% at $4,609. It is holding comfortably above its moving averages, with the 50-day at $4,203, the 100-day at $4,389, and the 200-day at $4,514. Silver had an even bigger surge, jumping 1.95% to close at $69.44. It has cleared its 50-day average at $61.50 and its 100-day at $68.40, though it is still trading just below its 200-day moving average of $71.67.
To wrap things up today, let's look at some of the major individual corporate movers outside of the tech giants. Who were the big winners and losers?
On the winning side, Viva Systems was a standout, closing up more than 15% after beating second-quarter earnings expectations and raising its full-year guidance. Nutanix also closed up more than 6% on a strong revenue beat of $757.1 million.
And on the losing side?
Wendy's plummeted more than 13% after reports surfaced that Trion Fund Management has no plans to make a bid to take the fast food chain private right now. Also, Hormel Foods dropped over 10% to lead the S&P 500 losers after its third-quarter net sales came in below Wall Street estimates.
A very busy day indeed, with tech continuing to dominate the narrative while the rest of the global economy watches the central banks. That is all for today's episode of Market Brief After Hours. If you found this useful, please follow Market Brief After Hours.